Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Hi, everybody. This is an archived edition of Talking Real Money. That means it's from several years ago. So the offers, the particulars are often quite dated and are probably not valid anymore. So remember that when you listen. And thanks so much for listening to Talking Real Money.
Reality radio for a really great future. We're talking real money.
Yes, another week, another opportunity to try to put your financial house in order, to try to make money easier to understand, to try to help you learn how to be a real investor, not a gambler, to put things in your favor, not your broker or your insurance agent or whomever's favor. This is a show about putting your future ahead of everything else. We talk about money because money fuels it. Money fuels your future. Without it, down the road, you will not be able to enjoy the kind of life you'd like to enjoy. So the best time to start planning for that future that you'd like to have is, well, since we can't go backward, I guess it's today. So we're here. I'm here. This week, I'm here to help you do just that. I'm Don McDonald. My partner and co-host Tom is taking a break. Went to the beach. No, not one of those kind of beaches. He went to a beach in Oregon. I know. We just smile and nod and go, yes, Tom, yes. Yeah, it is still a beach. Yes, you won't go in the water. I understand. That's probably smart. So he's taking the weekend off with his family. And good for him. So I'm here to help with anything that involves money, but particularly investing. That's what I've been helping people with for, oh my gosh, when did I start in the money business? I can't be that old. 32 years ago. 877-397-5666 is the telephone number. 877-397-5666. Are you in the right kind of investments for your best possible future? Are you getting advice from the right people? Are you using the right things? Are you going in the right direction? Have you gotten the straight scoop? Are you being told the truth? Probably not. No, seriously, probably not. The advice out there is horrible. Horrible. In fact, last week, I feel, and I'm not going to get into politics at all, but I feel like I'm living in an alternate universe. It just feels very funny here right now. I'm hoping we'll get over that. But last week, and this has nothing to do with politics, the universe flipped on its head again. You see, once upon a time, there was a financial columnist by the name of Scott Burns. And Scott wrote a lovely column on investing based on evidence and science. Scott was a very helpful man. As a matter of fact, many of you probably read his nationally syndicated column, which the main paper for it was the Dallas Morning News, but it was in the Seattle Times and many, many others. Now, Scott wrote a great column, and I've talked to Scott many times, like him, agree with him, smart man, knows what he's talking about. Well, he decided to retire from his column. And I honestly don't think Scott had a hand in choosing his replacement. If he did, Scott, wherever you are in that airstream, I'm a little disappointed, but I want to believe the best. So, Scott, I do not believe that you chose Professor Lawrence Kotlikoff as your successor. For those of you who don't know Professor Kotlikoff, again, another person I've talked to multiple times, Professor Kotlikoff is a bit of he's unusual. He's eccentric, shall we say. Professor Kotlikoff runs for president every 4 years. He's a professor of economics at Boston University, and he has a very good Social Security program to help you pick the right time to take Social Security. But that's about it. I don't agree with pretty much anything he says. I think he's a little out there in his thoughts. And nowhere is his being more out there, more obvious than in the first column that Professor Kotlikoff wrote after he replaced the very logical, sensible Scott Burns. And after we take care of this other stuff, gonna share some of it, not all of it.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. You will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
Your guides to a really great financial future. Tom and Don are talking real money.
Need some help with your investments? Want some common sense approaches to dealing with the market? Need to create an income from your portfolio? Need a little help figuring out who to deal with? Whatever. You're trying to build a better future, right? Well, let's get started. 877-397-5666. That's 877-397-5666. I'm Don McDonald. Tom's taking the weekend off, and today going to talk a little bit about a couple of things. Before I get to Lawrence Kotlikoff's column, I want to let you know that I will be covering the topic I teased last week, spoke a little bit about last week, which is the state of continuing education about investing in American colleges. Colleges around the country, not just locally, but around the country, sponsor classes on all kinds of lifelong learning subjects. And, of course, investing is one of those. So I did some research on the classes being taught at many of the, in this case, Seattle area colleges and community colleges. And the results, well, you're going to want, if you're thinking about taking a course in investing from one of these colleges, you want to listen. And if you've taken one, well, I want to hear from you about the course. I want you to tell me what you ran into. I'll tell you more in a moment, but first I want to read you a little of this column from last week. This is the column that Scott Burns used to write, now written by Lawrence Kotlikoff, a economics professor, who I think considers himself a smart guy. He's got a PhD. Apparently PhD does not, common sense is not in those letters. No, he starts off fine. And this is the thing. You start to read the article and the column and you think, okay. First sentence, smart economists never predict the stock market. Okay. Are you a smart economist there, Larry? Our theory tells us that it's impossible. Okay. So far, so good. Don't predict the stock market. It's not possible. Oh, probably because it's the future. I digress. Leaving aside inside information, everyone already knows what we know and is traded on this old news and moves stock prices accordingly. So, in other words, he's pretty much saying you can't predict the stock market because what's happened has happened. And new news is things that people don't know yet, he says. He actually says that. The fact that only new news, things that people don't know yet, can change stock prices means that stock movements are supposed to be random. That is unpredictable. So, he says, why would a card-carrying economist like me predict a stock market crash? And he doesn't answer the question. No, he goes on to ramble on about the tulip bubble in Holland in the 1630s. And because of that mania, the price of tulips plummeted. It was tulips there, Lawrence. That was tulips, dude. And he says today's stock market is not a tulip market, but his reasoning is really kind of wacky and massively political. And it all revolves around President Trump, who is a little wacky. But Professor Kotlikoff strikes me as no less wacky. He goes on talking about possible trade wars and Muslim bans and allies, and even alludes kind of to war a little, maybe, not really. And his final recommendation in this relatively short, nonsensical column is, quote, sell your stocks and your long-term bonds too until the dust settles. Excuse me? Until the dust settles. One, there's no visible dust. You can't actually see the dust right now. If you could see the dust, maybe, okay, there's trouble. But you don't see any real dust. Nothing you see tells you anything about the future. And then, since it's just metaphoric dust, how do we know when the metaphoric dust has actually settled? He says, to end the column, no one knows where all this will lead. What we do know is that uncertainty and the stock market don't mix. If I was enrolled in one of Professor Kotlikoff's classes, I would immediately drop it, because apparently he does not understand the stock market. Uncertainty is what drives the stock market. If it wasn't for uncertainty, in other words, if the growth in stocks was straight line and absolutely certain, there would be no uncertainty, and therefore the returns of the stock market would be riskless. Therefore, no need for outsized returns. The reason the stock market provides outsized returns, Professor, is because of the uncertainty. There has always been uncertainty. There will always be uncertainty. That is the nature of this crazy thing called the future. It's uncertain. We were supposed to have flying cars. Remember those? We didn't get them. But no one ever said you were going to have a supercomputer, a Cray 2 supercomputer, actually a more powerful computer than a Cray 2, hanging out of your back pocket. Okay? That's the thing about the future. It's uncertain. What did the market do all last week? Man, it went up. I don't pay any attention to what the market does day to day, nor should you. You should never buy and sell based on some lunatic. And I'm not saying you're the lunatic, Professor. If you feel that way, it's your issue. I'm talking about all the lunatics out there who tell people when to buy and sell, because trying to tell people when to buy and sell is, when you say in your own column that it's impossible, is then, well, what's a better word than lunacy? Crazy? Oh, no, wait, that means the same thing. Nuts? No, same thing. Insane? No, it means the same thing. I think they all mean the same thing. So, when someone tells you it's time to sell stocks, or when someone tells you it's time to buy stocks, pay no attention to them. There is only one proven way to invest sensibly for the future, and that is to create a portfolio that is designed for your need and or tolerance for risk, that is massively diversified with the lowest fees possible given the amount of service and care you need. It's simple. And as Scott Burns knew it made for boring columns. Boy, if Lawrence Kotlikoff wanted to make a splash, this was the way to do it. And it's really very Trumpian of him because it's a way to make a splash. But it's not good advice. It's pathetic. It's horrible, irresponsible advice. 877-397-5666 is the number. I'd love to talk with you. Give me a call.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
For your real life and real future, Tom and Don are talking real money.
Welcome back to the show. I'm Don. Tom's on vacation. He's taking the weekend off. I want to thank everybody, and there were a lot of you who came out to Retire Meet last weekend in Bellevue. Awesome event. You were all amazing. I had a terrific time. I had great classes. Really responsive. The responses to the survey have been great. We had a lot of really terrific speakers, and we're gonna do it even better next year. Your feedback has led us to some conclusions about next year. It's going to be a little bit more compact, a lot more in the way of true experts, absolutely incredible, impeccable credential experts. And no, it is not likely Professor Kotlikoff will be there. Scott Burns. Hey, Scott, if you want to come, if you're out there in your Airstream, you want to stop by, we'd love to see you, because you're sensible. Larry, not so much. And we really appreciate you being a part of it. We're going to do it again next year because it was so successful. We're going to do it again, but we're going to do it differently. We're going to do it better. Every year we're going to try and do it better. Right now, I want to help you build a better future. And the number to call is 877-397-5666. That's 877-397-5666 on this President's Day weekend. And now, before I've got to get to this because I don't want to leave this until the end of the show because I think it's really an important topic. As a matter of fact, if you think I'm going to leave it after this show, you're wrong. I am going to keep after this and really hold these people to account because what they're doing is, well, it's wrong. It's irresponsible at least. It's irresponsible at least. Now, what I did was I just randomly went through various colleges in the Puget Sound region. I looked at, started with the University of Washington, and University of Washington, their continuing education stuff is all taught by their professors from what I could gather. So I couldn't find any lifelong learning courses there that were taught by lay people. But that's not the case elsewhere. Looked at a variety of schools in the area, and I ended up finding 6 that had investing classes. And the 6 were Olympic College out on the peninsula, Bellevue College, Shoreline Community College, Tacoma Community College, Seattle College Central, and Seattle College South. I took a look at the people teaching those classes. And by the way, getting their CV, finding out their background, whoa, not easy in some cases. In some cases, they merely have the last name of the person, and it took me a while to find them. It really did. Now, this all started, we've done this before in the past because of some woman who wrote some wacky book about investing that's horrible, and she was selling stuff. But it started because last week we received a call from a listener telling us that a guy teaching a class out at Olympic College was he had 4 classes. The first 3 classes were sort of classes. The last one was a variable annuity sales pitch. And the guy even admits that it's a variable annuity sales pitch. And apparently the guy who teaches this class had, I know he had, because I now remember the call. He had called us and claimed that a 7% guarantee for 10 years on an annuity, a 7% lifetime withdrawal benefit, or whatever he called it, was a reality. It was an actual number. And I said, it's not. Show me the disclosures. And I went and did some looking and saw a couple of annuity experts out there on that guaranteed rider. They've actually run the numbers, and in this case, there were several times they ran the numbers. An annuity earning 3% per year, and they did the IRR, and they found out that the internal rate of return, the actual internal rate of return on these things, was not anywhere near 7, but more like 3 to possibly 5, not 7. There's a long distance between those numbers. And that's where it started. And I want to talk about some of these other colleges and what they're doing in just a minute.
Tom and Don are talking real money.
I discovered something really interesting not too long ago. It's the fact that people still like getting printed magazines. I read most stuff online, but the vast majority of subscribers to almost every publication known to mankind subscribe to the print edition. I didn't realize. I'm sorry. So I've decided to correct my mistake, and I have created a brand new magazine, the only one that I know of that is totally devoted to real investing. It's called, aptly enough, Real Investing Journal. Real Investing Journal comes out every single quarter. Real Investing Journal is not about speculating. It is not about business. It is not about lifestyles. It is not about politics or other news. It is strictly about the process of building wealth by becoming a real, disciplined, scientific-based investor. And it comes out every single quarter, and you have an opportunity to get it for a lot less money and to lock that price in as a charter subscriber. Annual subscriptions are going to run $25, but if you subscribe soon, you'll be one of the charter subscribers who not only gets it for $15 a year locked in, but you'll also get the very first issue of Real Investing Journal as a bonus while supplies last. So here's how you subscribe. It's really easy. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. And then what do? You subscribe. Then we'll start mailing it to you. And if you don't enjoy it, I'll give you money back. What do you have to lose? You got nothing to lose. So go to realinvestingjournal.com/subscribe, become a charter subscriber to Real Investing Journal, and I guarantee you've never seen a publication quite like this because nobody that I can find focuses on the truth about investing, except, well, of course, now Real Investing Journal. So go to realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe, and I know I said that a lot, but I want you to remember it. And now back to the show.
Reality radio for a really great future. We're talking real money.
Hi there, I'm Don. Welcome to Talking Real Money, where we try to give you the real truth about real investing, and a lot of people don't like that. Oh, well. Life's tough, ain't it? 877-397-5666 is the phone number. If you want the truth about what you're doing with your money, you might want to call me at 877-397-5666. But right now, before we go to the phones, I want to talk about the colleges. I promised I'd do it last week. Again, I looked at six colleges. Olympic College, Bellevue College, Shoreline Community, Tacoma Community, Seattle College Central, and Seattle College South. Those are the 6 I looked at. Now, I've already mentioned Olympic College. The course there is taught by a guy who sells annuities. Come on, what kind of course is that? It's a course designed to get you to buy an annuity from the guy. That's not a course. President of Olympic College, You should be ashamed that this was allowed in your curriculum, even if it is continuing education. Boo! Bad, President. Stop it. You have a fiduciary responsibility to your students. You need to vet these classes. And if they're being taught by a commissioned salesperson, either boot them or make sure there is no sales pitch. Sit in a class and listen. I have no problem. If these people are not selling at the end of the class, but I happen to know this guy is, if they're not selling and they're actually teaching and they just happen to be a salesman, that's one thing. But if they're selling people anything in that class, they should be kicked out on their derriere. Gone, because it's not a class anymore. It's a sales pitch in disguise. Bellevue College. You should be semi-ashamed, possibly. One, you got a lot of your classes being taught by a market timer. Has anyone at your school ever checked the statistical evidence on market timing success? It is horrible. Most market timers fail, and it is not something that can be taught. Plus, you have one class being taught by a Raymond James stockbroker / investment advisor, one of those dual registered things where you don't know which hat they're wearing at what time. Now, I don't know if that guy is selling stuff, but if he is, he should be out. And if he isn't, well, okay, I guess. But by the way, Raymond James, even if you are a fee-based Raymond James client, not fee only. Whoa, talk about obfuscation. I want to read a little bit from their ADV Part 2 from advisorinfo.sec.gov. Here's their fee schedule from Raymond James. This is their fee schedule. Client fees are structured as either assets under management or transaction fee business, AUM or TFB. Some accounts may participate in a hybrid fee, where a portion is based on AUM and a portion based on TFB. The decision is an economic decision for each client. AUM. The AUM billing case is computed using the FDIC quarterly call report filing that all depositories are subject to file. Due to the nature of the CR filing and trade flows, all AUM billing is in arrears. The CR must be filed at month end to the month following quarter, so that March 31st report must be filed April 30th. The AUM is typically calculated from CR Schedule RC line items for investments HTM plus investments AFS plus interest-bearing deposits plus Fed funds sold. But this is negotiated on a per-client basis. Huh? Well, that's clear as mud. All right, Bellevue College. Bellevue College, check your classes out. Check. You're an academic institution. Shouldn't the advice given be based on academic research? Seems like it. Shoreline. Again, I don't know if the person teaching there is selling during the course, but if they are, they should be fired. It's a dual registered CFP who works for LPL, Linsco Private Ledger, which is a stock brokerage firm. So remember, they're dual registered. You don't know if they're looking out for you or themselves. And they have an advisory firm called Private Advisor. The fees there start at 2.55% per year. Oh, they do go down. They do go down. At $1 million to $5 million, they go down to 2.25. Woo! Big drop. Tacoma Community College. Same for you. Make sure he isn't selling. And come on, a guy from Ed Jones. Please have somebody teach these classes who actually understands the science of investing. Okay, those are the bad ones. Seattle College South. Better. Your guy is not a salesman. He's a retired attorney who's written a book on investing. Yeah, it's too much about technical and fundamental analysis, very little about indexing, but he's not selling anything. Good for you. And my favorite, Seattle College Central. You actually have a CFP who's a boglehead who teaches global investing. Wow, Seattle College Central, you guys know what you're doing.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular Lunch Ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live Lunch Ed classes right now at TalkingRealMoney.com, TalkingRealMoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at TalkingRealMoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next Lunch Ed class right now at TalkingRealMoney.com, TalkingRealMoney.com. And now, more Talking Real Money.
Your guides to a really great financial future. Tom and Don are talking real money.
I had to do that really fast. I apologize. It was just the length of the segment. But I want to congratulate Seattle College. It appears, and I'm just guessing based on my research, but it appears that you actually vet the people teaching your continuing education classes. Wow. Impressed. You have a fee-only advisor. Even if that fee-only advisor is telling you probably should work with them, at least it's a fee-only advisor who's required to be a fiduciary. And the class being taught, I looked at the curriculum, and it's dead on with what the research shows. The research shows. Olympic College, Bellevue College, Shoreline Community College, Tacoma Community College. You guys need to do a better job. And if any of you listening have attended one of those investing classes at those colleges or any other college, I'd like to hear what your experience was, what you experienced in these classes. 877-397-5666. You can also call that number for anything about getting your financial house in order. 877-397-5666. And Gene, you're up. Welcome to Talking Real Money.
Well, good morning, sir. How you
Hi,
doing
Gene. What's up?
Well, I was wondering if you could repeat that fee schedule that you just read. That was quite entertaining.
Yeah, the fee schedule. No, I don't want to do that. It hurt me. It was very complicated. But you know what? If anybody wants to read these things, you can go online. It's a website. It's advisorinfo.sec.gov and type in the name of any brokerage or financial advisory firm. If they are a registered investment advisor, it will give you their fee schedules. It's easy to find.
Not so easy to understand, though.
No, not in this case. This is the worst I've seen.
Yeah. I had a question about asset allocation and international market. So, I understand the desirability of having part of your assets invested internationally. And so I have two questions on that topic. One is, it seems to me that if you're invested in, I guess you would call it large cap companies, so I don't know what the percentage is, but I think a number of them are clearly global companies. They're not just operating in the United States.
But there are global companies on both sides of the oceans.
Right. So that's kind of the first part of my question. Don't you get exposure to the international market by investing in large cap companies? And you
get exposure to the international market, but you leave out some very large, gigantic international companies. I'll give you a perfect example. Right now, Kraft Heinz is trying to buy Unilever. Now, Unilever, you buy a lot of their products. I guarantee you do. But you don't participate in their stock unless you buy Unilever stock, which is traded on European exchanges.
Okay.
So Unilever's it's not an American stock. You're not buying Toyota if you're buying only American stocks. You're not buying. By the way, the folks who own Anheuser-Busch are now a Belgian company.
Right.
So it's a global market. And I ran some numbers, Gene, just recently, just a few days ago, looking back at what you would have made and I used only large companies for somebody. And over the last 40 some odd years, and I can't give you the exact numbers, but looking just at the U.S. market, $10,000 over about 40 years would have turned into approximately $1 million, ballpark. If you had been overseas and in the U.S., it would have turned into about $1.1 million. But your volatility, so you would have made more money and your risk would have been lower. You would have had less volatility.
Okay, well, that kind of gets to the second aspect of my question, I guess, is what how does the strength of the U.S. dollar play with international fund investment? So what happens to those when the dollar's getting stronger, which I think it's doing now? How does that affect the value of investments, in developed markets or emerging markets or whatever?
Most of these international funds that are managed by U.S. managers have some kind of currency hedging to reduce the amount of currency fluctuation. But bear in mind, if you own U.S. and international stocks, you're on both sides of all the currency trades. So you're actually getting a nice balance of all that fluctuation. And if you look at currency trading historically, it has been a flat market. It all works out. The dollar goes up for a while and the euro goes down for a while. Then the euro goes up for a while, the dollar goes down for a while. They fluctuate relative to one another. And when you look at it on a global scale, the line, while it's all over the place, the value of the dollar and the value of these other currencies, when you draw a line through all of them, it looks quite straight. I think we overthink it. We're overthinking it. That's pretty flat.
Okay. So over the long term, it balances out.
Over the long term, it has balanced out. I don't know anything about the future, but the balance over the long term has been striking. And the fact, and this is a studied fact, well-studied fact, that a balance of U.S. and international equities has actually made more money over decades and made more money with less perceived risk. Because remember, when you own the whole world, you have no risk of losing it all. The only risk left is volatility. That's the bouncy stuff. Well, if you reduce the bouncing, you're less scared, so your risk feels lower. So it makes a lot of sense. And, Gene, thanks for the call. I really appreciate it. 877-397-5666. And, Tom, you're up next. Welcome to Talking Real Money.
Well, thank you very much. I appreciate you taking the time.
My pleasure, sir. What's up?
My question to you is, I retired from the fire department about 3.5 years ago, and I'm lucky enough to have a pension. Yay me.
Yeah, there aren't many yayus.
I know. I am sad for those and happy for us, but that's part of it, right? I drew the big hand, I guess, the aces.
Yep.
My question for you is, the state is now offering those of us that retired a chance to buy into an annuity if, the capital IF, if we use money that was funded from a 457. Mm-hmm. I have some 457 money left over, which I plugged into an IRA. Mm-hmm. I'm not a stock trader, but I dabble a little bit. And in there, I've made about, 2 to 5% on average.
Right.
I'm wondering what your opinion is if I should buy into this annuity. If it's roughly about, you have to have, go ahead, I'm sorry.
It's new. You're not the first one to ask about this. Matter of fact, we had a question about it at Retire Meet this weekend. It's a relatively new product. And I haven't studied it. I've heard about it. If what I've heard is true, it sounds pretty good. But that's
what
just
I've been
what I've
told
heard.
Is, $25,000 minimum, and it's going to get you about $134 per month. So if you put in 100, you would get around $538 a month, and it's got a cost of living adjustment that goes with it.
Right. That's the part that everybody seems to be attracted to. And that is, in an annuity, a pretty cool thing. It is something that you don't get in some of them. It usually reduces your return pretty dramatically. And looking at those return numbers, just first blush, I have not really analyzed them. These look like they have the potential, but give us a little more time. We will talk about it on a future show after we've had more time to study it. Thanks, Tom.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full-color worksheet and some special perks. So sign up for our upcoming Lunch Ed classes right now at TalkingRealMoney.com, TalkingRealMoney.com. It's under the events section, and you will get a real investing education on a variety of topics. So go to TalkingRealMoney.com, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
And if you want a real class on the real science of investing, I'll be teaching one short lunch ed class coming up on March 1st in either Bothell, Tacoma, or down in Scottsdale, Arizona. And we'll give you lunch. It's just $10. And if you don't believe that was a 100%, no doubt about it, valuable class, we'll give you the $10 back and you'll get a lunch on us. So sign up right now for our next lunch ed classes at TalkingRealMoney.com. They're very limited. TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.
Yes, it's time for another one of those inevitable interruptions that go with this being a podcast from a live radio show on commercial radio. This one is about something you're going to really enjoy, though, and something from which you could derive a lot of benefit, and that is the fact that we are now bringing our live lunch ed classes to the internet so that you, along with the folks at our offices in Seattle and Phoenix and Portland, can actually attend the event. You just won't get lunch. You're going to have to go get your own. But you'll still get the same great education, and you get a free worksheet, and you get some other perks that go along with the class. Tickets are only $5. That's it, just $5, and you can get them right now at TalkingRealMoney.com. TalkingRealMoney.com. I guarantee that you're going to get a great education, and if you don't feel you did, let me know. I'll give you your money back. It's really just that easy. So sign up for one of our upcoming lunch ed classes today. Don't put it off because somebody might take your seat. Go to TalkingRealMoney.com, TalkingRealMoney.com. It's under the events section of the site, and I hope you'll attend one of the upcoming classes. And now, please continue listening to our program.
Reality radio for a really great future. We're talking real money.
Hello there, folks. I'm Don. Tom's on vacation, and this is a show designed to help you make more money from your money. Not a lot more. This is not a get-rich-quick show. I am not going to tell you what the market's going to do. I have no clue. I'm not going to tell you which stocks to buy. Don't know. Oh, I know which stocks to buy. None of them individually, all of them in aggregate. There you go. Okay, you can tune to something else now. Now you have it. No, actually, you don't have it all. We are going to talk, though, about where you get your advice, the source of your advice, and is that source biased toward you or toward themselves? I mean, everybody's a little biased toward themselves, but is their emphasis on you or themselves? There's some questions you can ask to find out. Now, you may have to push a little, but you can find out. We're going to talk a little bit about the questions you can ask today. As a matter of fact, was it about a week ago? I was going to mention this. Yeah, I was going to mention this last week, but we had a shortened show because of Retire Meet. That was a pretty cool article by Ron Lieber in the New York Times. It was called The 21 Questions You're Going to Need to Ask About Investment Fees. If there are 21 questions to ask about fees, then there got to be like 100 questions to ask. But I think we can kind of shrink those down a little bit. It was relatively tongue-in-cheek, a lot of these questions, because it boils down to pretty much one thing. Are you looking out for me, or are you looking out for you? If you want to find out if they're looking out for you or looking out for themselves, call me during this hour at 877-397-5666. That is 877-397-5666. Are you getting the best advice? What is your source of knowledge about investing? You don't have to be an expert. I don't want you to be an expert. I don't think you need to be an expert. But if you want to be an expert, you're going to find it's not as hard as the, quote, experts, unquote, want you to think it is, because complexity is in their best interest, not yours. The more complicated they can make it sound, the better they do, the worse you do, the more you feel like you must have them in your corner to translate all of this. Well, it's not that complicated. And that's why we hold real classes all the time. We did them at Retire Meet. We do them in our lunch eds. We do slightly longer versions. And they're real live, honest to goodness classes on how investing really works. I guarantee you will walk away from the classes we teach going, oh, that's how investing works. Well, if I'd known it was that easy, I would have started a long time ago. Whether you do it on your own or you need help to do it, you need the knowledge to start the process. And I'll help you do it on your own, which these people at these colleges probably don't do, except for a few. At Seattle College, again, thumbs up. Nice work. Olympic, Bellevue, Shoreline, Tacoma. Quit hiring stockbrokers to teach these classes. I know, they volunteer. Of course they volunteer. They're going to make a lot of money. Yeah. Good people will volunteer too. Just ask, and by the way, folks at all these community colleges and the like, ask them this question. This is it. You'll vet them immediately with this one question. Are you always required to act as a fiduciary? If they say yes, the next question is, just to make sure they're not lying, do you ever receive a commission for the sale of any product to anyone, anytime? If they say no, then say, would you mind putting that in writing? Only because I know that people will lie verbally because they're told by their compliance department, don't ever put anything in writing. You can say it, and we can say you didn't. Just don't put it in writing. We'll talk about the questions you need to ask and a lot more, but I want to answer the questions that you ask at 877-397-5666. Because this stuff's important. This is your future we're talking about. 877-397-5666.
Tom and Don are talking real money.
Hi, brief break time. I'm Don, and I really wanted to share this with you because this is something I'm really excited about. I have taken much of the work that we do for our online Real Investing Journal and put it into a quarterly magazine that is, I have to say, pretty good and pretty cheap. And it is the only publication I can find anywhere that is totally devoted to real investing. You will find no business news there. You will find no lifestyle information. You will find no hard news, political news, speculation stuff. It's all about the science and the process and the discipline of real investing, and it's a way to keep you on track toward a better future. It comes out 4 times a year, and it's going to cost most people $25 a year. That's all, just $25 a year. But because it's brand spanking new, a limited number of people can become charter subscribers at the lifetime price of $15 per year. Plus, I'll get you a copy of the very first issue as a bonus while the supplies last, of course. So here's all you need to do. Just go to realinvestingjournal.com/subscribe and subscribe. And you'll start getting it in the mail every quarter. If you're one of the first 200 or so to subscribe, you'll also get the very first issue as a bonus. So be one of the first to get the very first magazine ever about investing and nothing but investing. Real Investing Journal, and you can subscribe right now, really easy, realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe. Now back to the show.
Your guides to a really great financial future. Tom and Don are talking real money.
I'm Don McDonald. Tom is away for the weekend, taking a break, and we're here to help I'm here to help. You're there to ask or help if you want. 877-397-5666 is our telephone number here. And a couple of the questions from Ron Lieber's 21 questions to ask your financial advisor about fees. I'll just give you a few of them. Let me just give you 4 right now. 1, how much money will you personally make in cash commissions now if I buy this product? 2, how much will you make later in any sort of ongoing or trailing commission? 3, are you earning more selling me this product than you might by selling me a similar product from a different company? 4, are you earning more if with this one than you might by putting me in a different vehicle from the same company? I'll give you some more later. 877-397-5666. Love to hear your questions for me or somebody else. And Brian, it's your turn. Welcome to the show.
Yeah, hi. So I've got a couple of questions. First is I've seen a website called The Motley Fool, and occasionally they make some stock recommendations, and so I was just curious what you thought of that website. Is the information on that website worth really looking at?
Actually, I think both words are appropriate. I think they're a little motley, and often they're foolish. They have argued the value of individual stocks for as long as they have existed, and they have argued against indexing for as long as they've existed, although lately, because it's been proven over and over again in study after study that passive investing beats the heck out of trying to pick your own stocks, they've come around to some extent, but their bread is still buttered on their stock picking, so they continue to do it. And I think picking individual stocks is okay. It's okay as long as the stocks you purchase are purchased with money that you have earmarked for gambling, period.
Okay. All right. And the other question I've got is, for people who, basically live paycheck to paycheck, don't have a lot of money to be investing, what's a good way to start?
Oh, it's a great question. And let me tell you, I wish that I had been the one who started this website, and I wish that they paid me for plugging them, but they don't. When I found out how this worked, I actually personally went and set up an account just for fun, because saving, if you save a little and you save a little here, a little there, it adds up to real money. I was shocked. As a matter of fact, I started doing this just about, I think it was a little less than a year ago when it came up on the show. And I'm going to log into my account right now just so I can show you how much money this makes. I set up an Acorns account, and it's acorns.com. And I set up an Acorns account less than a year ago. Now, what Acorns does is it attaches itself to my checking account, and it rounds up bills. Just, a couple of bucks here and there. I think I put in a lousy little $10 a month. I think I set it up for that. And then it rounds up all of my other bills, like $2.50 here, a dollar there, a little bit here and there. 50 cents here, a dollar there. They don't round up much. In the last 30 days, I've invested $68 just rounding up. From when I started, I am now up to $777. And I didn't do anything.
Okay.
Now, if I was putting $50 or $100 a month in, I'd be up into I'd be approaching the couple $1,000 mark here. And then they put the money in the kinds of investments that we would put them in small company stocks, in value stocks, in international stocks. You can buy the whole market this way and own a diversified portfolio. And some people complain that, I think the cost is like $1 a month or something. Yeah, if you're only investing a couple of dollars a month, that's a lot. But once it gets to be a lot of money, those fees are pretty darn cheap. So I honestly think it's just awesome. I really do. Sure, it's not absolutely perfect, but darn close in my opinion. And I don't get a penny for saying that. Wish I did. Probably be richer. Not rich, but we're a little richer. 877-397-5666 is our phone number. Thanks for the call, Brian. And Amir, you're next. Welcome to Talking Real Money.
Hi, Amir. Thank you for taking my call.
My pleasure. What's up?
I'm about 6 years old, and over the past 25 plus years, I've invested money on a deferred tax account, and they are diversified, some in the large caps, some in the small caps or indexes and whatnot. Mm-hmm. Recently, I've been looking at certain annuities, and they have different philosophies, but the ones that they attracted me are the ones that they give you a guaranteed income. And there are different products out there. Some of those, your initial investment is subject still to fluctuation of the market. Mm-hmm. Some of them are not. They actually guarantee that your initial investment never goes down.
Yeah, those are called indexed annuities.
I'm sorry, yes. But they also guarantee an increase of the value, like 6.5% every year. The question I have for you, they look very attractive. They look to give you a certainty of the income that you get, and they also protect your initial investment. But their fees are about 1 to 1.1% annually of the highest value of your account. Would you think that fee is reasonable for the assurance you purchase?
One, I challenge you to really, truly read the disclosure documents, because I think you'll find that the fees are a little bit higher than 1.1. I've read probably dozens of these disclosures, and I find the fees generally run between, when you add everything together, 2.5 to 3.5. Second, particularly these indexed annuities, are big fat lies, because they claim to give you the return of the market, which they do not give you. The 6% return is an illusion. I suggest you go to the web and you read some of the annuity experts who've actually sat and crunched all the numbers. As a matter of fact, if you type in 7% guaranteed annuity, there is an article by an annuity expert that will show you, I just read it a few days ago, that will show you that the 7 or 6% guaranteed addition, when it all shakes out after the fees and in reality, works out to be a true return on your assets of somewhere between 2.5 and 5%, depending on the product, depending on your age. So these annuity products are designed to obfuscate. They're designed to be opaque. They're designed to be confusing. And I have never, ever, ever met a person who has read the entire disclosure document and who has actually gone ahead and purchased the product after reading all of the stuff they hit you for.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
For your real life and real future, Tom and Don are talking real money.
Serious dough, in other words. And I want to help you get this right. So give me a call at 877-397-5666. And let me tell you, if I honestly believed that these annuities were in your best interest, I'd tell you they're not. They are not. Oh, and by the way, you want to find out how bad they really are and how much they really, really make the people selling them? Ask them what the first year surrender charge is. You'll find that that's pretty darn close to being equal to what the first year gross commission was paid to the the salesperson and the firm. You need to know these things, and they don't like to tell you the truth about them. That's why it's so important that you ask a lot of questions. A lot of questions. And then you don't take them at face value, you get them in writing. 877-397-5666 is our phone number. And by the way, if anybody refuses to put those answers in writing, that should tell you a lot. No advisor worth his or her salt is going to decline to put a promise made in writing. Any excuses are bunk. Bunk, bunk, bunk. 877-397-5666. Oh, by the way, if you want to learn how to do this on your own or how to pick the right advisor, come to one of my Lunch Ed classes coming up March 1st in Seattle, Tacoma, or in Arizona if you're going to be down there escaping the cold. 877-397-5666. And Kevin, you're next. Welcome to Talking Real Money.
Okay, well, thank you very much. I certainly appreciate Don and Tom, and I'm in South Carolina. I'm actually a listener on your podcast, but you guys do a phenomenal job from a fiduciary standpoint. Really want to thank you for it. I recently took a 2-day class on retirement planning here in South Carolina, and the professor talked about an asset-based long-term policy. He described it as an insurance chassis where you could deposit, like, say, $100,000, be guaranteed a 4% rate of return, and then you would have some type of rider with a $250K death benefit. And he just kind of
and it's long-term care on top of that, right?
Right, exactly.
Right.
So I've never heard of that before, and he also said that it's kind of difficult to find any long-term care policy. So I definitely don't do anything with annuities. This has red flags written all over it. But I was just curious to see if you guys have heard of it and what your thoughts were.
Oh, yeah. I've heard of them. I've explored them. I've studied them. I think they're expensive. The agents make out like a bandit on these things. Commissions are huge. They won't tell you what that is either, which is what I hate. I just wish they would come out and say, I make 6% on this. Just tell your client you make it, and if they want to pay that, okay. But they don't. They don't like telling you that. I have a real problem with the state of long-term care insurance, and I've had a problem with it for a long time. I don't think it works very well. It has been most of the policies that existed in the past. They've either raised their premiums to astronomical levels, or they've just gotten out of the business altogether, leaving a lot of people in the lurch. A lot. This is a real problem. And I don't know that anyone has found a solution, and I don't believe these asset-based policies are necessarily the solution either. They're the best we have, and they're not a great solution. How good a saver and investor are you?
I'm a ravage saver. I do my 401k maxed out with the Roth option every year, put $5,500 in my IRA, and probably, squirrel away another $20,000 a year in mutual funds in individual stocks.
And how serious are you about taking care of your health?
Very serious.
Okay, let me just tell you what the actuarial facts are, is that someone like you is very unlikely to be put into a situation where you won't be able to afford the long-term care you need. The average stay in long-term care is about 2 to 2.5 years when people either get better or they die. So if you have a couple of $100,000 that you can earmark for that eventuality, you're, for all intents and purposes, going to be self-insured, not making an insurance agent a lot of money. So to me, I'd rather have control of my money.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full color worksheet and some special perks. So sign up for our upcoming lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. It's under the events section, and you will get a real investing education on a variety of topics. So go to talkingrealmoney.com, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
So many questions, so little time. We want your questions here on the show at 877-397-5666 because your future is at stake. Your future is at stake. And bear in mind, people selling you stuff, well, sometimes they'll say things that aren't exactly honest. 877-397-5666 is the phone number, 877-397-5666. And I neglected to mention the website to go sign up for my classes coming up, the lunch ed classes. Just a little less than an hour. You get lunch. So basically it's, deal. $10 gets you into the class and you get a really nice lunch, and you just sign up at talkingrealmoney.com, talkingrealmoney.com. And when I mentioned so many questions, we were talking about annuities and insurance policies. I want to go back to the Ron Lieber article from the New York Times with some of the questions you need to ask. And the question section that he devotes to annuities and insurance, holy cow. You ready? Here are the questions, and I'm going to read the questions in order that he says you should ask them. And when we're done, I want you to think about this for a minute and tell me, are these the kinds of products you want to invest in when you have to ask these questions? Okay, ready? Here we go. Verbatim. How much extra will I pay in fees, or how much might I sacrifice in returns or payoffs if I elect to receive a sign-up bonus on my annuity? Or for a guaranteed minimum income or benefit if I elect to take my money in monthly payments starting at some later date? What if I want death benefits for my heirs? Are there specific charges for the insurance component of the product? Are there any penalties for pulling my money out early? I'll come back to that. As for any sub-accounts in my annuity, are there expense ratios or fees for the money there? Is there a separate management fee, trading fees, a record-keeping or other administrative fee? Please provide me an itemized list of any and all fees. Thank you. Does your firm stand to collect any fees that you yourself will not share in as part of your commission because they have favored one product or another, or limited their platform to certain products and locked out others? Holy cow. Do you see all those questions? There are all of these ways for them to hide fees. They have fees for sign-up bonuses. They have fees for guaranteed minimum income benefits. They have fees for death benefits. They have fees for the insurance component. They have surrender fees. The surrender fee is the most telling of all fees because a surrender fee exists to pay the commission. Let's assume an 8% commission paid to the agent who sells you the product. Of course, they'll never want to disclose that to you. They'll tell you there isn't one. And it's not shown in the disclosure documents either. Look at the surrender charge. That'll tell you what the commission is. The surrender, they pay an 8% commission, the insurance company, to the agent. Now the insurance company is out 8%. They paid that out. They don't want to be out 8%. So if you withdraw your money tomorrow, they want that 8% back. That's a surrender charge. That's the surrender fee. They know they will make that back in all of these other fees, which, by the way, Mr. Lieber goes on to say that annuities may cost about 3.5% annually when you add up all the fees. And he goes on to say, for about 1/3 of that, or even less, you can find a fiduciary advisor who will give you all you can eat advice on every aspect of your financial life and put you in solid, if boring and simple, this direct quote, if boring and simple investments that cost a tiny fraction of what many annuities do. Bum, 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 bum. That's all I'm asking, is that you stop dealing with these non-fiduciaries. Stop it. I don't care which fiduciary you go to, as long as they don't charge more than about 1% a year for their services, and they tell you that up front, and they put you into investments that don't cost you more than about 0.5% a year in internal fees and expenses. That means all in less than 1.5% a year, which excludes, for most people, Merrill Lynch's services, their advisory services, Edward Jones's advisory services, Ameriprise's advisory services, LPL's advisory services, et cetera, et cetera, et cetera, et cetera, et cetera, et cetera. You want fee-only people. See, these fee-based people, they are still living in the commission world. They're not a full-service world yet. They may be working that way, but they got to bring the cost down.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular lunch ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at talkingrealmoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next lunch ed class right now at talkingrealmoney.com, talkingrealmoney.com. And now, more Talking Real Money.
Your guides to a really great financial future. Tom and Don are talking real money.
And sharing with you the real truth about investing, about real investing, not this game that the folks on CNBC and Fox Business and Bloomberg play. It's a game. And it's a game you can't win. You can't. Quit playing. If you need some help becoming a better investor, give me a call at 877-397-5666 or go to one of our classes. Go to talkingrealmoney.com. Learn how to become a real investor. You shouldn't be playing these games. And the games don't work. That's the thing. Wall Street would like you to believe they work. For years, there's been a lot of talk about how you can create a hedging strategy where you can hedge your bets. You can protect yourself from the downside while maximizing gains on the upside by having a portfolio that plays both sides. That's the theory. And sometimes the theory works. That's the nice thing about these ideas that Wall Street comes up with. Sometimes they work. As a matter of fact, sometimes they work well, right up until they don't. And I'm never going to suggest a strategy to you that thinks it can take out the risk and give you all the return. That's just bunk. It's impossible. You got to take risk to get return. You can't change that formula. It's immutable. You can't do it. But hedge funds keep trying to do it. And there's a little futures hedge fund out there. Well, not so little. It's got a little over $3 billion in assets. It claimed that it would protect you in sudden declines by their option writing strategies. They use options to build a portfolio that is supposed to protect you in rising or give you money in rising markets and protect you in falling markets. Well, how did they do recently? We've had a nice run in the stock market. Not sure why. Don't really care. I can't know why. But since the election, the S&P 500 has gone up about 10%. Well, last week, this fund called the Catalyst Hedged Futures Strategy Fund lost 15% of its value in 5 days in a rising market. They claimed the reason was, well, the market went up too much. Doesn't work if it goes up too much. Huh? I thought you were hedging. And this is what gets me. Let's say you went to a stockbroker or a non-fiduciary financial advisor, investment advisor, a non-100% fiduciary investment advisor, and you got into this fund. They got you into this fund. To get into this fund through your broker, you would pay 5 3/4% up front. But wait, there's more. The annual expenses of this fund, 2.17% per year. They trade all the time, so the cash in the portfolio turns over about 200%. The entire portfolio turns over about twice a year. About twice a year. And while it had been historically a low volatility fund, there are always aberrations like this one. So how much money would you have made in this fund if you had invested in it so far over the past year, the last 12 months? We've had a pretty good stock market. How well would you have done? Total return on this fund over the last 1 year period through the end of last week, through Friday, was just under a 10% loss. The 3-year return, about treading water. 5-year return, about 2.5%. The 10-year return, not bad at 9.24, but you had to suffer through some really bad stuff, and you had to pay a fortune to get in, which reduces that return. People forget a load reduces your return, and it reduces it below what they show you there because they don't know how much you actually paid in a load, so they can't show you that in the return figures. Turned out to be a lot more dangerous than people thought. You can't know. That's the problem. You cannot know. And you will not know. And the less you understand a product, the less you understand an investing concept, the less likely it is to be good for you. There is an inverse relationship between the quality of an investment and the complexity of an investment. Investing is too simple to be this confusing. It really is. So, if you're confused, call somebody to get help. Or come to a class. Call them every week between noon and 3 p.m. Noon and 3 on the West Coast or 3 to 5 on the East Coast at 877-397-5666. As you noticed, we had a call from South Carolina, so people call from all over the country. So give us a call, and you need to get the questions answered. That's why I started this hour with the questions from Ron Lieber at the New York Times. You don't get the answers if you don't ask the questions. Oh, and one other I forgot to mention, an area that is critically important that you ask most of these brokers. Do you get anything else? I can't even imagine getting anything. But I know when I was a broker, we used to have what were called spiffs. You'd get sent on a trip. you'd win something. There was one of these guys, he sold annuities, and then he got religion. He got religion like me. I used to be a stockbroker. I gave it up. He got religion and stopped and started being a more honest advisor. But he said after a couple of big sales 10 years ago, he made enough money selling annuities to get his wife a $3,500 diamond ring. $3,500. Now, that's a commission. So ask them, do you get anything else? Is there anything else in this for you? Or really just eliminate the issue altogether and make sure you hire a fee-only fiduciary advisor, someone who will put into writing that they are always going to act in your best interest. That doesn't mean you're going to get good people necessarily, which is another reason why if you're looking for somebody good, go to DFAUS.com. DFA is a fund group that has a list of advisors with whom they work that believe in this science of investing. And then you can check them out. You can see what their fee structure is like, shop around, call them, talk to them. Make sure you have somebody with whom you have a rapport that you feel is honest, and then deal with them. But stop dealing with these commission people. You're just getting killed. Just getting killed. If you want more, go to TalkingRealMoney.com. That's TalkingRealMoney.com.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. You will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet, and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
For your real life and real future, Tom and Don are talking real money.
And if you want to give yourself a leg up on investing, give yourself a little more knowledge. That can be obtained through a lunch ed class that I'll teach on March 1st in Bothell, Tacoma, or in Scottsdale, Arizona. We do it electronically. And you get lunch, too. So you kill two birds with one stone. You get lunch and an education. But you have to sign up now because seating is limited. Go to TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?